I've spent the last 15 years investing in the stock market, and over the course of my journey, I've made hundreds of thousands of pounds in profit. In this video, I'm going to break down exactly what it takes to invest in the stock market as a beginner based on my actual experience, not theory. And this isn't your usual buy ETFs and forget about them spiel you get from other content creators. I'm going to break down my approach, and it's a little bit different from what you've seen before. The first thing that we need to do before we get into the nitty-gritty of what it looks like to start investing is explain what investing actually is. Investing is just another way of saying ownership. So if you think about it, if you are an investor, you're someone who buys a share or a portion in a company. For example, if Apple had 100 shares and you bought one of those shares, you would own 1/100th of the company. Now, the stock market is something you've probably already heard of. It's just a platform or a vehicle where individuals, high net worth individuals, and funds can buy ownership within companies. Now, in the United Kingdom, we have what's called the London Stock Exchange. And in the US, they have the New York Stock Exchange and the NASDAQ. Now, the majority of stocks that I buy in the stock market are on the NASDAQ. And the NASDAQ is tech heavy. So you've got the likes of Nvidia, Apple, and Amazon that are traded on the NASDAQ stock exchange. Now, you can get very deep when it comes to the stock market, but all you need to understand that the stock market is where you go and buy stocks. Just like how you might go to the supermarket to buy groceries and to buy items, the stock market is where you go to buy shares and get ownership within companies. Now, a question I get asked a lot is, why do you need to invest? Why should someone start investing? And the fact is, I truly believe that investing in the stock market is the easiest way for any regular person to build wealth. You don't have to be a rocket scientist. You don't have to be someone who's super clued up. You don't even have to be that passionate about it. But the facts don't lie. And investing in the stock market is a great way to compound your money, with indexes like the S&P 500 increasing around 7 to 8% every single year, annualized. Not everyone is going to be able to open a business. Not everyone is going to be able to get a high-flying job that's going to pay them hundreds of thousands of pounds every single year. But everyone has the capability and the resources to get started with investing in the stock market. And you can get started with as little as £10 right now using the phone that you're probably watching this on. It has never been easier to invest in the stock market. And one of the main reasons why you should be investing in the stock market is because you need to beat inflation. Now, inflation is the secret superpower that's working against you. You might realize that the groceries you buy in the store today are more expensive than they were 3 years ago. And the fact is, the money that you keep in the bank is not catching up with inflation. If inflation is 4 to 5% every year, that means that you have to make 4 to 5% on the money that you have in the bank just to buy the same amount of things that you could buy last year. And the fact is, so many people out there right now are not making at least 4 to 5%, which means that every single year you're losing money to inflation. And really, the only way to get around this and the only way to fight back is to grow your money by more than the 4 to 5% that you're losing every year to inflation. And one of the best ways I've done this is through the stock market, investing in some of my favorite companies like Nvidia, Apple, and Amazon. Okay, we've spoken about the stock market, we've spoken about why you should invest in it, but what should you buy in the stock market? How do you pick the right stocks? Well, really, there's two main ways of investing in the stock market, and the first one is beginner friendly, and that is investing in ETFs or exchange traded funds. These are just big baskets of stocks that have been compiled together. Think about when you go grocery shopping, you don't just go in and buy one item. You go in and buy a basket of goods. You might buy eggs, you might buy flour, you might buy milk, etc. So when you're investing in ETFs, you're buying a small piece of a lot of different companies. For example, the main ETF out there at the moment is the S&P 500. The S&P 500 is the top 500 companies in the US by market cap. And by buying a share in the S&P 500 ETF, you are buying a very small portion of each of those 500 companies, meaning that you're getting an average return of all of the 500 companies in the stock market. Now, the reason I say that this is the most popular and beginner-friendly way of investing is because you don't have to think about anything. You can invest purely on passive mode. All you're doing is buying shares in the top 500 companies in the United States every single month or every single week. And as the average increases and rises, you want to get richer and richer. Now, the S&P 500 ETF will increase by an average of around 7 to 8% every single year. That makes it perfect for beginners. However, if you're a little bit more financially savvy and you want to chase those higher returns and you're willing to take on a little bit more extra risk, there's something else which, in my opinion, is the better option when it comes to investing. And that, of course, is investing in individual stocks. Now, you'll hear a lot of rhetoric out there at the moment, and people will say investing in individual stocks is risky, your capital is at risk, these stocks can go to zero. And look, I've heard it all. But in my experience, in the last 15 years since I've started investing, I've made the most money I've ever made in my life through investing in individual stocks. In fact, I have never ever bought an exchange traded fund, an index, or an ETF in my entire life. So my preferred approach when it comes to investing in the stock market is buying individual stocks. Now, these are your favorite staple companies. Companies like Amazon, companies like Nvidia, companies like Apple and Google. And if you look back historically over the last 15 years, these companies have done incredibly well and have actually outpaced the majority of ETFs. For example, looking at Nvidia versus the S&P 500 index over the last 10 years, you'll see that Nvidia has massively outpaced the returns that you'd get from the S&P 500. Now, I have an entire video going through this where I talk about investing in ETFs versus individual stocks. So check it out up here if you haven't seen it already. So my approach when it comes to investing is pretty simple. I invest 80% of my money into blue chip stocks. These are your household names like Nvidia, Apple, Amazon, and Google. And I invest 20% of my money into more speculative plays. These are your high risk, high reward stocks like Archer Aviation and Surf Air Mobility. These are stocks where a lot of them are pre-revenue, so they're not yet making money. So you're getting into these companies fairly early on. They are high risk, high reward, and they're not any companies that I personally recommend beginners get into, but they're where I allocate 20% of my capital. At the end of the day, whichever method you choose to invest with, whether it be ETFs or individual stocks, it doesn't really matter. The main point I want to get across with this video is that investing isn't hard and it's open to anyone. So I want to debunk a lot of these myths that people have about investing. Now let's go through common questions and fears that people have when it comes to investing in the stock market. And this is where I want to debunk a lot of myths. And this is the section that I think is going to be most helpful from this video, because a lot of people out there have these myths about investing in the stock market and it's put them off from investing, and it's put them off for years and years and years and years. So hopefully by the end of this, you can feel more comfortable with your investing journey and you can feel more comfortable about taking the next steps and investing in the stock market. So the first concern or fear is the fact that your money can go down and you can lose everything that you've invested. Now, a lot of people do not invest in the stock market because they like consistent returns. They'd rather put their money into a savings account and get 5% every single year than invest in the stock market and potentially lose everything. Now, I'm here to tell you that that can happen. You can lose all your money if you invest in very risky assets. But if you're investing in ETFs or you're investing mainly in blue chip companies like Apple, like Nvidia, like Google, it's very rare that your stock is going to go to zero. If you think about it, Google's been around for a long time. Apple's been around for a long time. These are big blue chip companies. If they went to zero, that would mean that the entire workforce would be fired, their products wouldn't be selling, and nothing would be going on. And that is very, very, very rare. I'm not saying it couldn't happen, but if it did happen, that would be the least of your worries, because at that point, the macroeconomic world would be in literal meltdown. So it's very unlikely that your money will go down all the way to zero, but that's not to say that there are not peaks and troughs in the stock market. If you would have started your investing journey in March of this year, a month before Trump came out with his Liberation Day tariffs, then you would have seen your portfolio in the red for a while. So it all depends on when you're investing. I'm not saying that you're not going to see some downturns, you are. And if you're scared of that, maybe investing isn't for you. But in my experience, if you invest for the long term and you're willing to keep your money tied up for years and years and years and years, then it's very unlikely that over a longer time period, you will see red in your portfolio. And the reason I'm so confident in saying that is that everything that I've held in my portfolio for more than 5 years, I am massively in the green on. And there's no stocks that I have in my portfolio that I've held for at least 5 years that I'm red on. Whereas stocks that I've recently invested in like Meta are showing some signs of red at the moment. But I haven't held those stocks for at least 5 years. And I know that to have a consistently green portfolio in the stock market, you need to give your positions time. You need to let your winners run and you need to let the market do its thing. And that's exactly what I do with my long-term positions. I'm not a short-term investor. I don't trade, I don't do day trading or swing trading. I invest and I hold stocks for the long term, and that's how I've made the bulk of my money in the stock market. And that's the exact strategy that I recommend to beginners when they start investing. Stop trying to make money quickly, zoom out and look at the bigger picture. Now, the second question that I get asked all the time is how much money do I need to get started? And this is where I think a lot of people are surprised. Now, people come into this thinking that they have to have financial education, they have to be in the finance industry or investing industry, and that truly isn't the case. Now, you can get started investing with as little as £10. So using a platform like Trading 212, you can buy fractional shares with as little as £10, meaning that you are buying a percentage of a single share in a company or an ETF or an index fund. It really couldn't be easier. These apps now can be downloaded on your phone in a matter of minutes. You can sign up and you're able to invest immediately. Now, for beginners, I always recommend that when you're investing, you invest in what's called a stocks and shares ISA. This is a tax-free account that allows you to invest £20,000 every single year, completely tax-free, meaning that any money that you make on that £20,000 is void of any income tax or withdrawal tax or capital gains tax. The final common question I always get is, how do I open an account? And again, that couldn't be easier. You simply navigate to one of the apps like Trading 212 or Hargreaves Lansdown, follow the instructions and get yourself a stocks and shares ISA account with either platform. That is going to enable you to deposit your money and get started with your investing journey. It literally couldn't be easier, and you can do this in a matter of minutes. This is the easiest thing that you'll ever do. So investing in the stock market is super easy, and beginners can get started today if they wanted to. Don't make it complicated. Don't think that it's a daunting process. It really, like I said, couldn't be easier. You can get started investing with as little as £10 on the phone that you have in your hands right now. If you want to know more about my exact investing strategy, make sure to check this video out where I go through the exact steps I take when picking stocks.